Good evening. Ira Epstein with your financial market wrap-up, and this wrap-up is for Thursday, the 23rd of June, 2022, just getting on around 7:55 p.m. Central Time. Interesting day. You developed on Wednesday bearish embedded readings, and you lost them today in the Dow, in the S&P. I know you're going to tell me the market's down today. It doesn't mean anything. The fact that you lost them, unless you have a big down today, being Friday's trade, a big one, means that the odds favor that this is a trap on the pullback and the market wants to give you some more short covering. I'll stick my neck out and say that. Energy markets, a little bit of everywhere, obviously, having trouble holding on to big breaks. Bonds and notes, they got up to their 18-day average. That's all they had to do. I think they're going to run out of upside momentum. In the grain markets, it's been a massive washout to the downside, just busting people. People don't know how to trade bear markets. I've learned that. I warned traders 2-3 weeks ago, and I've been saying it in my newsletter. I don't remember the last time that I put out a buy signal in grains. You enter summer, you normally get the crop planted, you get it planted, you go through this period right now where things have to grow. It's unusual that on June 23rd, you're getting a lot of bad weather to hurt the crops. It can happen. You get too much rain. We get years with it. It's not this year. So that's a bearish force. In addition, we keep hearing talk that Ukraine grain is going to come back online. That's a bear force. I've been saying that. How they get it out of the market, I don't know. I know that some of the long-range weapons, excuse me, that the Biden administration had sent to Ukraine arrived today, the same day that the European Union has given the candidacy to Ukraine. That's a big historic moment. Slap in the face, certainly, for Russia, but the U.S. and our partners in the European Union, they will do anything to embarrass Putin and to hurt him at this point. He is the enemy, and they're going at him, all guns tilted that way. When you look at the foreign currency market, it's a little bit of everywhere. Back and forth. A big rally today in the end. I'm not quite certain what that was all about. The Bank of Mexico, they went ahead and they went with a 3/4 point rate hike, and they said there's more coming. Of course there is. Whatever the U.S. does, they do. They match us, if you've ever watched it, hand in hand. So as we look at the S&P, okay, we are up. For the week, we're up 3%. I know it doesn't feel like it, but you are. So you're finally getting a bounce, similar to what you have at times. Have you changed the bear trajectory of this market? Not in your wildest dream. The market's come down, and as I said, we've gone into something of a stall here. The pattern is still one of lower highs, lower lows. You've got to take out this high. And if you do so, let's see if I can get you over there, in fact, to do that. Let's see if it'll let me. No, it's not going to let me do what I wanted. But that would be the number that you got to get over. And if you do, you go into a stall. Right now, I want to get you over to the point where we're taking a look together at moving averages. Okay, if you had a big rally, 39.21 would be the resistance. The Bollinger Band, you've bounced away from, a nice way from the 30 level, 40 level. You've come up very nicely. And in the momentum, you had an embedded reading that you've lost. When you lose an embedded reading, unless you go back under this low, I think it's 3630 area, you have to get up and should get up to wherever the 18-day average is. You'll see this similar pattern in the bonds and notes, and I'll point it out to you. In the NASDAQ, oversold, getting a bounce in the market. Okay, maybe it's enough of a bounce to get to the 18-day average at the 12,016 level, but it doesn't change the bigger chart picture. It is still a bearish chart picture. Nothing has changed. In the Dow, trying for the embedded reading, don't have it. You can get up to 31,544. Frankly, I'd like to get a rally. I don't want markets that just keep going straight down. They're easier to go short after they've rallied. The difficulty's here unless they embed because the markets are in oversold territory. When you come to the Russell, same thing, not embedded, getting a bounce. Maybe you get up to 1784. But while everybody else will be getting bullish, I'll be telling you, no, I think you've wasted your time getting up there. Look for the next set of sell signals. Right now, I am in the camp hoping that we get a rally in the market. It's that simple. In the VIX cash, the trend is down, but the bias is up. So if you fall, I'm going to look for support between 27.92 and 26.91. If you were to close under those, I'd get a bear signal that could carry you back to the 23.56 level. Right now, I'm pretty neutral on that. In the 30-year bond, I was looking after you lost the embedded reading for the market to just get itself, if you will, back right here to the 18-day average. Okay, you exceeded it by a day or two. So what? It doesn't mean that much. When we take a look at the 10-year notes, same thing. You lost the embedded reading right here. If I come back to the bonds, let's see if I can get you there too. There we go. Let me get it right here. You lost the embedded reading right here. Both carry to the 18-day average. That's the same pattern you just had take place in the stock index. So be careful. Not all of them, but the ones that I was telling you had embedded. So I'm looking for a short covering rally. I'm not bullish here. Which way do you think the Fed's going with interest rates and other people? They're going higher. You want to be long this? That means you're betting on the yield falling? No, right now it can fall. Why? Because everything in the market has collapsed. People aren't picking up on this. I don't know where their brains are. I've got it. You're in a deflation area right now, not inflation. Commodities go like that. They move because of 90% leverage. You have taken these markets from high prices all the way down dramatically. It's not going to last with deflation as the common theme that, oh, prices are going to deflate. No. But if you've taken a look, if you look at KB Homes, they came out today, and their guidance went up. All we keep hearing is higher interest rates, nobody's buying. Let me tell you why their guidance is up. Did you read their study? 68% price of lumber decline. Copper just fell, 25%. You get these prices down like this with a strong demand, even with a high interest rate, there's a certain amount of people that want to buy. Why? Because there's no supply to speak of on the marketplace. So, as the commodity markets are coming down, be it the grain prices, be it the metals, you see that what the copper's done, I can go on and on. What takes place with that, even the crude, by the way, is down about $12 from its peak. When you get this, it pulls back. It can give a reason to the stock market to get a bounce. But is this a permanent move? The answer is probably not. Do I think these markets are going back up to their highs? In most cases, no. It will take an act of God, Mother Nature, to hurt the grains to get it to go back to those prices, in my opinion. Rain makes grain. You always bet that the crop's going to be made. For the poor guy that's out there that bets year after year, it's not going to be made. Nonsense. You have beans in the teens. You've got corn that got up to a $8 number. It gave the farmer a big edge. What I don't want to see is that the U.S. gives a lot of farm support to farmers. They've got plenty of money if they're doing hedging. We don't have to do that right now. You guys can stand on your own for a while. In the 10-year notes, the market has come up, and you can see where the market is fighting at the 18-day average of closes, as I said. In the dollar index, while the market's in a minor downtrend, it's contra trend. Why? Because you're over the 18-day average. So it's a pullback towards that. That's all that I see this being. And in the euro, pretty flat. You have the trend up, and it's a contra rally. Notice where the market ran into the resistance just yesterday, the 18-day average of closes. That doesn't mean you can't flip this bullish. At some point down the road, the dollar, with all its interest rate hikes, is going to lose favor as other currencies will come online and they'll say, we're get more aggressive than the U.S. It's not that their rates have to go higher than the U.S. It's where in the cycle they are of raising interest rates, and you've got to pay attention to that. In the British pound, with all the bearishness, you're not going back down here at this point. This market's wasting a lot of energy and not breaking. I'm always leery of when I see that. The trend is certainly down. Bitcoin, you're embedded. I think the pros are selling short on this rally tonight. I'll look to see if you lose the embedded reading. Either you close over 21 on the red line, or you're going back, in my opinion, to that lower Bollinger Band. When I take a look at Brent versus WTI, I've got the August versus the August contract. Just keeps widening out to a $6 differential. And when you take a look at what we've got slipping down. Now, the president has called in the refineries to talk to them. Supposedly, they had constructive talks. Do you honestly think any refiner that gets called in by the president is going to walk out of that meeting and saying, hey, the man's an idiot, he doesn't know what he's talking about, the meeting went terrible? Of course not. It was a pleasure to meet with the president. Yes, he had constructive things to say. It was wonderful. Yeah, maybe there's something there. And of course, you go into your room and go, ah, what the heck? You know I'm right on that, okay? He's killed the refinery business, and he's telling them what he wants to do. Behind closed doors, he might be threatening them of shutting off oil exports. He might invoke some war act to make them produce more. I don't know what's going on, but I would bet you anything. I've just given you the scenario that took place and how the people think about it. In the WTI versus the crude, you're down into a support zone. Between here and the 100-day average, look for good support to show up in the market again. And in gasoline, you're just at the beginning of the driving season, my friends. Look for support in the 358 level, and somewhere along the line here, we're going to get, the July 4th driving. It's not far away. It's 10 days or so. So you'll get that demand coming in. And why do you think that the gas stations haven't lowered price? Because they don't have to. They got you caught. They know they got another leg of demand. After that, they'll drop prices a little bit. Been around this game. It's a pretty easy game if you've seen it. And that's the problem with these meme traders from Robinhood and others. They have no idea how bear markets work. I've been at this 53 years. I've learned a thing or two in my day. In natural gas, this was that 16% where you can't export the natural gas. We're still producing it, goes into the U.S. Now, you got to get into the fall, and then this market will straighten itself out as we get into later summer, start approaching the fall. And that's when they'll start saying, oh, the terminal's doing better. We might be able to start exporting soon. Europe's desperate. The word is desperate for natural gas. Germany has a 3-phase emergency plan. They're in phase 2. The next phase, I don't know what they do. They're not going to meet, as I see it, having reached by October 80% of their reserves. They're at 58% now, and they haven't had a hot spell yet. Where do you get that? So they're going to have coal and other things. What Mother Nature is doing, what the war is doing, is saying, hey, don't give up on dirty coal. Don't give up on fossil fuels. It's wonderful to talk green, but you have to do it in phases. It doesn't happen all at once, and the U.S. energy policy is a sham because it doesn't understand that. They try to make leaps and bounds instead of walking, not crawling, walking to get things done. It's a real shame that we've got all that going on. Now, I talk about that, and I talk about a lot more just the way that you're hearing me talk here in my full research. So let me explain what I do. Monday through Friday, I put out 2 written updates. One at 11:30 a.m., approximately Central Time, and the other before 8 p.m. Central Time. On Friday, I put out 1 morning update at 11:30, and on Sunday night, 1. I back up on Monday through Friday morning with videos where I talk market positions. I walk you through trades. Does your broker do that? You have anybody that does that? I don't think so. I'll give you a specific entry. I'll back it up with writing if you take my full research as to what I'm seeing and why I'm seeing it. Stop orders, they can be out on close, they can be a straight stop. I will mix them up. And the reports look a little like this, and they read really great even on iPhone, so you can work with it. So how do you get any of this becomes, to me, the real question. And it's simple. All you need to do at any point in time is go to our website, www.iraepstein.com. That's www.iraepstein.com under the word research. You can take your cursor, move it right up here as well, and that'll carry you, because when you move it up to the top, an icon will appear. Give it a click, sign up. Take advantage of my free offer to try my research. Take advantage of our futures trading kit. It's got a tremendous amount of information in it. Put it all together, give yourself a shot with this. I'm Ira Epstein. You have yourself a great trading day, and I will talk to you all tomorrow. Take care now.